All right, we're ready to kick off the first presentation of the day with Epti. Arli, Mujkic, welcome.
Thank you, Martin.
How does it feel to be the first company presenting on such a day?
Great. It feels great. I think you're going to have a great day, and I'm honored to be the first one to present today.
Yeah, so we're going to let you do your company presentation, and afterwards I'll be back and bombard you with a few questions.
Perfect, Martin. I look forward to that. All right, then I'll just jump in. So my name is Arli Mujkic. I'm the CEO and founder of Epti. Sometimes we say Epti stands for empowering programmers to innovate or empowering people to innovate. So a little bit of an introduction for the company. So some quick, interesting things. So we're an investment holding and a company builder with a focus on fast-growing tech companies in Scandinavia and in the DACH area and SEE area. So we have a headquarter here in Stockholm, where we are currently, and a co-headquarter in Munich. We also have subsidiaries in Malta, Croatia, Bosnia, Poland, Serbia, and Austria. So 8 countries in total. We founded the company in 2017, and today we have over 250 co-workers in the group. We're also a listed company on Nasdaq First North Growth, and since February on Frankfurt, and since March in Stuttgart in Germany. Our portfolio consists of 16 majority-owned companies, whereas the net asset value of those companies, of our share of those companies, is 70 million, based on the latest transaction mostly, and minus 50% control, so minority-owned companies, we have 9 of them, which amount up to 4.3 million euros in net asset value. Per Q4 report, we have an investable assets of 5.6 million euro. That total sums it up to 80 million net asset value as of Q4. A little bit about the shareholder structure. Founders, 45%, the management and board, 25%, and free float investors at 30%. The revenue consolidated for the group was 11 million with an EBITDA of 0.4 million euros. If we look at the 2 main consolidated and majority-owned business areas, core and incubation, core had a 14 million euros of revenue and a positive EBITDA of 2 million. And incubation, where we have fast-growing tech companies, we have a revenue of 6 million euros and an EBITDA of minus 1.6. The management consists of 5 people, and I will just jump right into explaining a little bit more about the business model. So, Epti. Epti is best explained as an ecosystem. It's a combination of an investment company and a professional service company. So when you combine those things, you get on what's called a company builder. If we look at this ecosystem, we can see that in the top we have Epti, a listed share on Stockholm Nasdaq, as well as Frankfurt Börse and Stuttgart Börse, where investors and shareholders can participate and invest in the group, being part of this fantastic ecosystem. So in the middle of the group, we have core. Core is a very cash flow positive core of the whole ecosystem, containing currently 4 companies, with the latest one to join, AdHype, that we acquired just 2 weeks ago. So when you look at the core, it's 75% tech and 25% management. So it's 150 co-workers that provide professional services to our incubation companies and to our growth companies, as well as third-party customers such as the Swedish Defense. So if we look at incubation there, we have companies such as Apotekamo, which is like Apotea or Doc Morris or Shop Apoteke for the Eastern Europe area. And then we have companies such as SaaS Store and App Store for software as a service, and so on. So it's majority-owned companies that we have acquired, started in some way where we have gained over 50% control. The center of those companies is technology, as the difference from core, where it's people that provide fantastic services to the incubation companies. If we look at the growth side, these are minority-owned companies that we have invested in, and those companies we have, such as modelmanagement.com, the world's largest model online agency, Space, the largest esports center and digital culture center right here in the center of Stockholm. And then of course we have third-party customers that all get provided both professional services and software licensing from the portfolio companies. So when looking at this ecosystem, you can clearly see that there is a very well balance of a highly rich cash flow core, positive cash flow core that provides professional services, mainly programming services, to portfolio companies, majority and minority owned, as well as external third-party customers. The portfolio companies, which are software companies on the left and right side, they provide software licensing to the same type of third-party customers. This creates a cash flow-rich ecosystem, which then provides ongoing cash flows to Epti as the mother holding that is listed, which everybody can participate in and invest. So if we zoom up the core, what exactly is core? Well, core is, of course, at the core of core is engineering. But apart from engineering, you have, of course, UI, UX, SEO, growth hacking, delivery, legal, M&A, and so on. So it's all of these type of services that both external customers need, but also, of course, our portfolio companies, which using these core services, as we call them, will provide the support for them to grow better and faster within our portfolio. So not just investing capital as a traditional investment company, we invest core services, which also brings us cash flow positive results at core, providing that back up to the mother holding to reinvest again back into the portfolio company. So that is basically the ecosystem. So what is our value creation process? It's very simply down to 7 steps. We identify a business and a market. We incorporate or buy a company. So in this case, it could be then the incubation. We can buy into an existing company to majority, or we incorporate a company with another company as a joint venture, or with an ambitious co-founder and CEO. We can also start a company, and then we grow it from there. Then we invest, of course, capital, but apart from capital, we invest core services, meaning IT and management resources. We then build the company as fast as possible with, of course, the technology being at the epicenter of that company. We only invest in tech companies, so we build everything as fast as possible, maintaining high quality. Then we make the company operationally successful. We create enterprise value for the company through getting in strategic investors, external investors, and then finally the 7th step, exiting the company. So talking about exits, what kind of exits have we done today? So it's important to have in mind that Epti is not older than 4.5 years. So we're going on 5 years now. And the median exit time is 4 to 9 years, depending on the segment, looking at sources as Crunchbase, for example. So we have gone from 0 to 25 companies in less than 5 years, and the median time for an exit company is 4 to 9, meaning that we're still in the early stages of our portfolio. But Epti has still strategically sold around 7% of its portfolio at an average size of 2 to 3% per segment every 18 months. That means that we every 18 months at average have sold about 7% or 2 to 3% per segment, recapitalizing as well back into the mother holding, the listed company, to be able to do reinvestments back into core and back into growth and incubation. Those exits have resulted in a 6.5 times return of investment and have resulted in about 3.3 million euros so far. So the best is still to come. So yeah, what is the difference between a company builder from incubator, accelerator, corporate accelerator, venture capital, and business angel? Well, first of all, we have teams from the very beginning, and we focus on the core support. So apart from not just giving the company capital, we actually give what's more important and invest what's more important. It's amazing coworkers and amazing people that provide deep operational support or core support to the company, meaning that they can go from 0 to 100 much quicker. And based on a study that GSSN did on 260 companies that had company builders as investors, they came to the conclusion that 30% better results for those companies that had a company builder involved, because you can start making the product much quicker, you go to market much quicker, you have the support in a way that will take you times to find yourself, to build that team up, etc. All of that exists from day one, not only capital but core support. So advantages from this, of course, means that we as a company builder, we have a larger stake, but that also means that we provide the professional services compared to, for example, venture capital, which has no core services in that sense, no programmers, no engineers going in deep. We have a lot of them in the core. We are part of controlling the strategy, controlling the operations, and most importantly, time to react on failures is immediate instead of delayed, as we are part of the operations during these companies in incubation and growth, as we provide core support. So a little bit about the landscape. So maybe one of the more famous company builders is Rocket Internet, but you have companies such as the Founders Factory, Rainmaking, Antai, and a lot of them have multiple unicorns in their track record. So it is a proven concept, but currently there is only one public and listed company builder out there, and it is Epti. So it's a great way for investors to participate in a broader tech portfolio while also having a very cash flow positive rich professional services core, which is used towards the portfolio but as well as external customers. So yeah, a little bit about our exit vision and exit policy and clear vision. So when we start and go into a company, either in incubation or in growth, we always make sure that it's IT and tech driven, that it has scalable economics, it's a disruptive product, it has international ambitions and a huge addressable market. So when we can check off all of those things, we look at the company and see what kind of clear exit strategy can we make. Is it a potential IPO? Is it some partial exit? Is it a full exit? Will we hold the company for a while and take part of dividends and so on? But there is always a clear vision from the beginning on how to recapitalize on that company after it reaches that type of maturity. So this is very important to know that we have that from the start. So a little bit about our portfolio. So we invest currently in gaming, fintech, marketplace and SaaS, and as you can see core there, it provides a deep operational support throughout all of these 4 segments. So some of the portfolio companies I will get back to a little bit, but today, since 2017, we have built a total of 25 companies, pretty evenly distributed, where you can see there is a little bit more on software as a service, of course, as it's a very, very fast growing segment, but overall we've invested in the portfolio in a quite good balanced manner. So looking at the portfolio, you can see that 43% of the portfolio is coming from, in terms of net asset value, is coming from core. So that means we evaluate those based on an EBITDA multiple, and the rest we evaluate on the latest external transaction. So you can see a little bit here how it's balanced out between the other 4 segments and core. Looking at incubation, the majority-owned portfolio companies, we can see that there is about 20 million euros in revenue in those companies, and they are currently in the majority-owned segment, 88% of our NAV, and you can see which companies are here and their revenue for 2021. Growth is a portfolio consisting of 9 exciting companies today, and it is, as I mentioned before, 4.3 of our net asset values. And yeah, you can also see from each of these segments how much is it from our NAV and which of these 9 companies are in there, such as Space, Triggy, Model Management, as I mentioned, Hubster, a listed company, and so on. So it's a little bit about our portfolio. Going into deep on every one of these will take time, so I'm just going to take a few examples. So one of growth example is Space here in Sergels Torg. It's a contemporary digital culture center. It's the world's largest gaming center. It is part from Epti, also backed by Pop House, which is Björn Ulvaeus and Conny Jonsson as well in the company, and a very exciting, great growth project to be part of as an investor. The next one is in Banner with investors such as Trustly, on-corner investor Trustly, and we also have partners such as Triggy, Mr. Gamble, and so on. It's in our gaming segment. It is a software that increases conversion 3 times over. We have Apotekamo, it's apotea.se or Doc Morris or Shop Apoteke for the former Yugoslavia area today, focused on, and it has a headquarters in Zagreb. It has over 500% growth. It is one of the fastest growing companies in the segment down there, so already being #1 in several areas of the region. Very exciting project as well. And of course, Invio, a software as a service company, which is providing an event platform for BMW, Bonnier, H&M, and so on. Also a great company. Looking at core, Factory is our first core company, which provides the deep operational core support, as I mentioned. So some of the customers are, of course, both external, such as Scepter, but also internal customers, such as Invio, Sastor, Workamo, Odash, and so on, as I mentioned before. And the last example is a management consultancy company called Aktia, which is providing management consultancy services, for example, customers such as the Swedish Defense. So that's a little bit of example from our portfolio. So I'm just going to go right into the net asset value. As I mentioned before, the NAV calculation principles, we are using the post-money valuation according to the last financial round, where we have external investors and it's a substantial round. And when there is no financial round available, then it's according to the book value, invested capital, so book value, and Epti Core is valued at 12 times the EBITDA profit. So that's pretty much how we split up and do the NAV calculation. And this is a little bit of our nice graph to show how we evolved in our net asset value since we started. So it's evolved by 1,750% since 2017. The bottom part you can see is the growth of the core. The top part you can see is the growth of incubation and growth together in equity. And yeah, it ends up today at per 2021 to an 80 million net asset value. Epti has only raised approximately 9.1 million euros throughout the history since it started and to its day to listing. So we've been able to create quite a value. And yeah, that's a bit about Epti. the board you can take a part of, and of course the last slide, most important one, is our fantastic coworkers. 151 of them in core in 8 countries at an average age of 34 and a split of 68 and 32% between male and female. That's it. Thank you so much from my side.
That's a great presentation, Arli.
Thank you.
It's very, very well done. What I was missing was we heard a lot about your company. What about you? What's your background?
Yeah, my background is actually a little bit different than usually. I started programming when after my parents came to Sweden during the Balkan War in '93. I got in contact with the computer for the first time here in Sweden, thanks to Sweden. And as curiosity has always been a driving factor to learn more new things, I immediately sat in front of the computer, started playing games like any other kid, but then I wanted to know how to make my own games. So I started coding at 7 years age, building my own first games, writing code on paper because we couldn't afford a computer, and then typing everything in school. And after that, yeah, I started my journey pretty much. 7 years later, started my first company when I was 14 in the US, Trivision 3D, a 3D engine. First exit when I was 20, and then built a couple of companies as a serial entrepreneurial before finally going into what I call parallel entrepreneurship with Epti, where we are using the core to build values in multiple companies at the same time.
I'm very happy you found the time to come here today as well.
Thanks.
What sets you apart? Now we've seen your company. What would set you apart from other companies on the stock market?
Very good question. I would say the combination of, if you look at stock market, you either see a lot of IT, I mean, in general, if you look at the past 20 years, a lot of popular companies on the stock market have been IT companies, such as consultancy companies or agencies and so on. And then you've seen the growth of investment companies investing in multiple companies at the same time. But really, we are the only one combining those two, where you can have a rich cash flow positive core, which is the service part, and then the investment part all in one. So as an investor, you actually get the ability to invest in something that has a very good bottom with a high core professional service rich center, with then also the growth of equity companies all in one. And through investing in our share, you get to take part of all that in a single share, instead of investing in an investment company and in a consultancy company that actually don't use the benefits of each other in the same ecosystem as we have done it.
So let's dive a bit deeper into this core. I saw it in the presentation as well. You had 150 plus workers there. How are they divided? Was management and tech? How many programmers do you have?
A good question. A lot of people ask that actually. So we have over 100 programs. So of the 150, over 100 are programmers, and the remaining are split between UI, UX design, growth hacking, SEO, PR, and marketing and project management and so on. But majority of those is and will always be programmers. And as myself, I come from a technical background, I know how important it is to have a big volume of really talented and good programmers. Of course, also with the management around that, as I mentioned, there's 50 of these 150 are also working with marketing, growth hacking, and data and analytics, and the project management and design. But having 100 programmers at our core to provide building services, professional building services in terms of core support, to incubation, to growth, to external customers is something invaluable. So that is something that makes us stand apart and also makes us much more safe for the future. Because if you look at what is going to be missing the most in the EU by 2025, which job is missing the most is going to be programmers. And
do you still code today?
Yes, sometimes I do. I do it for, of course, for the itch. I have to sometimes take a look at some code and do some fun stuff. But mostly, of course, I'm focused now 100% of my working time on building and creating value of Epti. A lot of focus now, apart from Sweden, is also on the investment market in Germany, as we are listed now on another two stock markets list there as well. So that's a lot of fun as well. I love that part.
I guess that's why we're doing it in English as well.
Exactly, yeah.
Now let's go into the investment process a bit. You acquired AdHype recently. How would you say you find the companies that you invest in?
Very good question. So we work, the people that work, as I mentioned, on the green lines in the top, so we work mainly with investments, M&A, and business development towards our business areas and also find companies. A lot of companies actually come to us as well, because the ecosystem tagline is by founders for founders. The 3 founders have been working on building companies together in the past 10 years, and before that 10 years before that as well. So a lot of companies come to us because they see a potential new home for their core company, where they can continue driving it as founders and management of that company, but being part of something bigger. Maybe it's too far away for them to list their company, or maybe it's not in their plan, but this way there is a potential to be part of something that is listed and bigger, in a bigger ecosystem, by coming in to core. So we both actively search through our network, through our advisors, but also companies come to us.
So what decides the stake? I know you divided it between, is it internal ventures and external ventures, which decides if there's a majority share ownership by you or by the founders?
Exactly. So in core, we always own the companies to 100%. This is very important, as we provide the deep operational services and want to partake in the cash flow generated from that to reinvest. So that one is 100% owned, all of the companies inside. From incubation, which is internal, as you mentioned, incubation, we can come to that company in 3 ways. Either we start a company with another company, like Workamo, that we started with PE Accounting, that's a joint venture, or we started with another co-founder, like in Banner with Björn Nilsson, or we acquire majority in that company that already exists, like Mobilearn, where we acquired majority and where we can see how we can make this company grow even faster by providing core and capital in to make it grow.
So looking at a new company, what's your exit plan strategy? What's your timeline?
Yeah, it's a good question. So the median time, as you saw, is somewhere between 4 and 9 years for each company. We've been selling every 18 months, so far about 7%. We want to exit the company when it has reached, from what we see, its maximum potential within the incubation from our part. So we can always partially exit the company, meaning that we partially exit it, it moves into growth, it continues to grow there as well as a standalone company without the deep incubation core support. Maybe core continues to provide some core services to it, but overall I would say that we're looking at maybe between, somewhere between 4 and 6 years, 4 and 5 years as a horizon. Some companies will go much quicker, some companies might take a little bit longer, depending on what kind of maximum potential we can see to get out of the company by providing our core support on top of the capital investment.
Now, I wanted to bring up a question as well from the live chat. They're asking about how your business model is affected by a tightening monetary policy and geopolitical wars going on in Europe and Ukraine. It's been stressful for capital markets. We've seen the stock markets crash both in Germany and in Sweden these last, this year basically. How is your business model affected by these conditions?
That's a very good question. So core is not affected in that sense that you can see that programmers are always needed. No matter the geopolitical situation, there is always a need for programmers, and we can see that there's a very strong growth in core and through the non-organic growth as well that core is getting, as we acquired 2 core companies last year at Hype now. We continue to have an ambition now to acquire multiple more core companies. So from that perspective, the cash flow and cash flow rich part of the ecosystem is not affected as much. Of course, looking at incubation and growth, you can see that some companies are getting a bit affected through in terms of potential access to capital and so on. But since you usually raise capital to turn that into what you need, mostly from core, building tech, marketing and so on, what is very good for us is that we have a cash flow rich core, which means that we can still keep on providing those kinds of very necessary services for those incubation companies to continue growing, which they do, both on revenue and growth and so on. So we are, I would say, of course, everybody's affected, but I would say that we are, because of our core with professional services, we are less affected than other traditional investment companies that just have a portfolio, and of course then there is no bottom that can provide a little bit more stability and a little bit more ground.
Sure. Now you're quite new to a listed environment.
Yes.
How would you say your workflow has changed going into being the CEO of a listed company? Pros and cons?
Yeah, very good question. I would say pros all over so far in the sense that being on the market means also being extremely transparent, which we like a lot. We've always been that, also as a private company, but now also more globally. This attracts more talent, this attracts more investors. Of course, the ability to acquire core companies as a new home by founders for founders and letting them to continue to thrive and grow as a core company inside our core is a fantastic way to do it when you are listed, to use your own share and getting those founders on board on the whole, whole ecosystem. So there's a lot of pros, of course, being listed for us, and that has been always the ambition, because this chapter that we are going into now and have gone into with the ecosystem, with growing core more through unorganic means by acquiring, and also going into the German market, listing there as well, has everything of that has been planned. Of course, when you look at the cons, there are always some exciting things that you cannot tell people about, which you previously could talk a bit more about, you could talk about and get people more excited about that in the organization. Today with rules, of course, as it is with being listed, you keep everything very, very tight and until it's ready to be released. And so there's a lot of things that you would usually maybe talk more about, be out there, create more hype, create more excitement around. With advisors, investors, partners in our network, this all is a little bit less dynamic now, but it still works very good. I think we are a company that provides quite steady news flow, and sometimes it's more, sometimes it's less, it's normal, but yeah, that's one of the things that have changed a bit on how we are able to talk within our advisory network for, about ongoing things.
Do you enjoy presenting on occasions like this?
Yeah, absolutely. I love presenting. I think it's fun. I present quite often in Germany, and coming here to you guys and presenting, I like to come here to you guys as well. I was yesterday presenting at Space Academy for 100 school children about the benefits of coding, starting early if you can, using the tools that are out there for you to build. Be curious, try to find out new things. So I like to present and talk to people, and
cool.
Hopefully
now, do you have a specific area that you like better than any other? I know I have a favorite. I've been down to Space as well, gaming a bit with my friends. I like it a lot. What's your favorite?
You mean from the portfolio or from Space?
Yeah, from the portfolio. Yeah.
Ooh, good questions. I mean, I like all of the companies. Truly, I do. I think that. Of course, core is something that makes us stand out a lot. So I would say core, if you have a planet and you don't have a core, then there is no planet, right? So I think that what we've been able to achieve with this is that we built an ecosystem, a planet where we really have a fantastic core with fantastic coworkers that are really happy to work there. As you saw on the employee net promoter score, 64, we take it every 6 months, and 90% response rate. So people are happy there, and this is very important for me, for us, for the co-founders, for everybody. And that's been something we've been very much focused on. Our events, we love our events. We have summer office, we have our Orbit investment event here as well once a year. So I would say that there's, I wouldn't say that I have a favorite, but I really do like the setup of having the core in our planet as we have done it, because it provides the much needed necessity for the ecosystem to be able to live and thrive much in the same way the planetary core does. Right? So.
Great question, a great answer to an impossible question. Now I wanted to just finish up with why should one invest in Epti?
Yeah, very good question. So if you are not an angel investor, as an example, or a professional investor, so if you're a retail investor, this is a great opportunity and a great way to invest into a single listed share that is also listed in multiple markets, where you have a cash flow positive core. So this platform bottom that I mentioned, while also participating in 25 portfolio companies across these exciting 4 segments through a listed share. Unless you're an angel investor, for example, then you have to have a lot of capital, you have to have the network, you have to get those deals to you. Unless you're an angel investor, there is really no, I think, practical sense that an opportunity for investing, for example, in the fastest growing online pharmacy in the Central European area. How will you as a retail investor get the opportunity to invest in something like that? Well, now you can through Epti, but not only in that, you invest in everything else that is there. So it's a great way to be able to participate from a single point into a broad portfolio, which is not only equity, but also has a very cash flow positive, rich core.
Thank you so much,
Thanks.
Arli.
Good questions.
Thank you.